have a lot of things that are happening, a lot of good things. The economy is doing unbelievably from the standpoint of Wall Street. We just set another record, as you know. It's 80 times where we're the best market in history.
So we got a nice CPI report, and in the backdrop of good earnings, stocks going up on good news. I think the rally is quite healthy, and it's tracking to our view that we could get to 7,900, 8,000 by the end of the month.
Well, that's what your call was, the other day. Ed Yardeni says we're now tracking so well that we can get to 8,400 by the end of the year because of the earnings story that we keep talking about. Does that make sense to you?
Yeah, I think that is sort of the underpinning of this, because 2027 earnings, probably 410 right now. It was around 395 at the start of earnings season, and it's probably going to be, by the end of this month, close to 425. And so if you put a 20 multiple on that, you're already close to 9,000.
This. So for you to pay a tiny little bit more for your gasoline, just remember, you're doing it so that a very evil country cannot have a country. Really, it's the number one state sponsor of terror in the world. We don't want to have them have a nuclear weapon. So remember that when you have to pay a little bit more, you're at $4. It's okay. I mean, I'm not. I'll never apologize. I did the right thing. But you could, if you didn't have.
Hey guys, Carlos Cortez here with another episode of Scriptures in Wall Street. I hope you're doing well. Today, I just wanted to talk about our weekend show about the S&P 500. There's a lot of things going on that I think you should maybe consider if you're just in a 401k or if you're in a mutual fund that literally just tracks the S&P 500. Not to mention that it's at an all-time high right now, and you know what happens typically when we hit these areas. And, this podcast is meant for information, education purposes only. I'm not here to fearmonger. I'm not here to give investment advice. I'm not here to tell you what you need to do. So if you are interested in learning more about what I do for a living, you can give us a call at 813-448-3446 if you would like investment advice, or you can simply book a consultation with us, a meeting. Sometimes it's 15 minutes, sometimes it's 45 minutes. You could just go to cortezwm.com. You can book an appointment online with us. Myself or one of my advisors will be conducting the consultation with you. I really wanted to just simply talk about something simple that is very powerful. And that is the S&P 500 is literally 500 companies that make up basically like the strongest companies in America. And it just hit an all-time high. We're looking at, as a close of Thursday, 7,799 on the S&P 500. It's the 27th time this year alone that it's reached the all-time high. The index is up about 14% this year alone. And that's not conspiracy. That is actual fact. So I'm not going to come here and tell you that the market is fake or real. I'm just going to tell you, or I'm not going to tell you that a crash is coming tomorrow, and by September 1st, you have to sell everything because the stock market or the dollar is going to crash. Guys, that's fear-mongering. We're not doing that here. And I'm not going to tell you to sell everything. But what I am going to tell you is that Wall Street doesn't advertise this very loudly. Record prices, all-time highs, all-time confidence does not eliminate risk. It hides it. This is where the fear and greed index goes hand in hand, and we'll show you what that is here in a second. So I just wanted to kind of look under the hood a little bit. And you say, Carlos, I'm diversified. I got my silver, I got my gold, I got my precious metals, as well as my mutual funds and my Edward Jones brokerage account. And I have all these great mutual funds. And you're looking at what you own, right? And the S&P 500 obviously contains a lot of the strength of America, supposedly. But the S&P is not equally divided like you think. It's market cap weighted. So according to the S&P 500, the Dow Jones Indices data from earlier this year, the 10th largest holdings represented 1/3 of the entire S&P. And the tech companies alone represented 38% of that index as of June 30th. So it's not even weighted properly. And before you believe that you're spending any money on the American economy, you have to also consider that the performance is being influenced by relatively a small group of companies, aka Tesla, Google, Meta, Netflix, Nvidia. These are the FANG stocks. These are the Magnificent Seven that we've been talking about for weeks now and years. But these companies are enormous for a reason. But I don't want you to confuse that you're invincible and it's not really diversified. And like I said in the last podcast, our economy literally is running off of 6 or 7 companies. And we've created like this religion in a stock market. We've created a new saying. Don't worry, it always comes back. Just stay invested. Don't worry about it. We're in it for the long haul. It always goes up. It's only a paper loss. Long-term investors, as you know, have been rewarded for enduring volatility. That's true. But there's one major component. Not everybody has 20, 30 years. And if you're 35, you're praying for a stock market collapse. A major hit can come, and it's a massive, massive opportunity for you. If you're 70 years old or even 65 years old, you already had accumulation in your favor, and you have $1 million+ bucks. Now you're withdrawing $7,000 to $10,000 a month to live off of, rightfully so. But that same person in the S&P 500 that is 65, 70 years old living off of income or withdrawals, that hits different. You don't want a stock market collapse. And this is where the crust is. This is where really, really happens. Because it's sad. Because now we're going back to Walmart to get a job. And there's massive losses, right? Plus withdrawals, plus fees, plus systematic risk. Then you have political risk. You have social media risk. You have all these risks that are just completely changing up the game. And this is what we call sequence of returns. So people can say, oh, I got a 15% return. The Dow's up 14 this year. Last year was up 28. And then boom, we had a negative 25% in 1 year, which is common. So you would need 50% just to break even if you've lost 25. So just imagine the market just drops like 30%, right? 30%. And you had $1 million portfolio. Now you're down to 700,000. Before you start considering withdrawals, to get 700,000 back to $1 million, you would need more than a 30% return. You would need basically 43%. And I want you guys to realize that although the S&P 500 seems invincible, I get it, the AI, the this, the that, but it's making us like numb to risk. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. And so when you do lose money in the S&P, you literally have to get outside of your investment tolerance. Now you got to drive on a left lane and become a driver, become an investor that you really shouldn't be. And it requires 100% vulnerability just to break even. And this is a trap that a lot of retirees fall into. And you'll coach yourself, don't worry, I'll eventually recover. How'd that work out in 2008? It took you about 7 years to recoup. How'd that work in 2001? It took you another 6 years to recoup. And that's if you didn't sell out. And 08 was bad enough, but 09 was even worse because you've lost all 10 years worth of gains, and then you started getting into your principal. And this is so important, guys. This is why I have the color of money. You see, we have red money, right? Red money is basically the Warren Buffett style money, the buy and hold. You have unknown fees, unknown risk. You don't even know what's going on. You're passive. These are the silver and precious metals holders. These are people that don't even change it up. You have stocks, ETFs, mutual funds, unlimited upside, unlimited downside, and you accept the market downside. That's the crazy thing. And there's no control. You literally have no control. So interest rates go down, interest rates go up, and you're trying to stay safe in the bond market, or you have international bonds, you're going to get your ass kicked. The safe is not safe anymore. Your precious metals isn't as safe as you thought it was. Your bank, your FDIC scandemic bank is not safe as you thought it was. Have you looked at the disclosures when you signed up? Your 401k is not as safe as you thought it was. If you really owned it, call your 401k company provider right now and say, I need to take money out, and see what they say. And actually ask them, am I an account owner or am I a participant? What do you want to be? Do you want to be a participant or do you want to be an account owner? And the reason why you're a participant is because you didn't come up with this account. That account is not based on your life. That account is based on you participating in that government written program called the ERISA plan, Employee Retirement Income Securities Act, which is a part of the Department of Labor. The Department of Labor obviously is the feds. And so you are going into a situation where it's rigged. You don't even control the terms of that 401k, aka your IRAs as well. ERISA does, which is pretty much like opening a Trump account. And I've gotten the calls like, hey, I'm going to do the Trump account, and my kids are going to have $20,000 by the time they're, or $64,000 by the time they're almost in college at 18. And great. Okay, so do your Trump account. But who's going to decide the investments? It ain't going to be you. They already have who they want in the portfolios. They already have it. Those investments will be controlled by the government. And your child will be financially inoculated. But yeah, grow. See how that works out for you 18 years from now. It's free money, Carlos. Great. I'm just saying it comes with some risk. I'm not saying don't put your money away for college. I'm just saying, just like they did with tax-free bonds, they're supposed to be tax-free, and they are. But guess what the heck they did when it came to Social Security? The people that buy tax-free bonds, when you have tax-free bonds, it is tax-free from your local and your state government. It is tax-free from the federal government, yes. But it is not tax-free when it comes to your Social Security. And most of the people that buy tax-free bonds are on the social welfare program called Social Security. So, you know, that earnings test that I'm talking about when you're when you're 60, full retirement age is 66, it goes against that calculation. If you take Social Security before your full retirement age, you can't make over $24,000, roughly $24,058, without getting penalized. I didn't say the word tax. I said penalized. So if you go over $24,000 and you are under full retirement age, which you don't even get to determine, the government does. So let's just say your full retirement age is 66 and you take it at 65 because 65 sounds like a great number to retire, and you got tax-free bonds. Those tax-free bonds count towards that calculation of that earnings test. The money from your bank account, from interest, the money from your 401k, the money from work, part-time work. If you go over $24,000 and you are 65 years old, you will lose 50% of your overall adjusted gross income to penalties, not even taxation. So I say that because a lot of people put money in red money thinking they're going to be fine, but they don't even know the rules when it comes to the welfare program. And if you don't know, then give us a call, 813-448-3446. If you are retired and you want to stay retired and you want to know how to effectively retire smart in an effective way, then give us a call. You may need a plan. You may just need simple advice. I don't know. But you can go to CortezWM.com, book an appointment with us, and we are excited to be an assistant to you and guide you through retirement. So you have the red money issue, which you can make money. You can make a killing in red money if there's a lot of high risk and there's a lot of different type of risk. But I really want to talk about green money. The beautiful thing about green money is when the S&P is at an all-time high like it is now, green money stands out. If you're willing to lose some of the upside to protect you on the downside, then an insurance-based contract on your money is going to be in your favor, in my opinion. You aren't buying unlimited growth in the stock market. You're buying a higher limited, a full growth on an index like the NASDAQ, like the S&P 500. You're exchanging some of the upside potential for the benefit of never losing your principal, for never having a down year, for the protection against market losses. And that is such a huge thing because for the right person in the retiree, protection, safety, consistency is the recipe for a consistent, successful, efficient retirement. Not because the S&P 500 is crashing tomorrow, because it isn't. But that's the point. You don't know when it does. And you're just riding on a left lane, completely vulnerable to potholes and crashes and just becoming an investor that you aren't not even called to be because you want to continue to get your 15, 20% returns. Everybody wants protections after a hurricane warning. Everybody wants burial insurance after they knew someone or a loved one have died and they realized, wait a second, they just spent 20 grand on a funeral. Everybody wants an umbrella after it rains. Everybody wants downside protection after your account drops 25%. Well, you know what's beautiful about what we do is that financial planning isn't supposed to predict tomorrow. It prepares us for tomorrow. And it is biblical, right? Scripture says the prudent see danger and take refuge, but the simple keep going and pay the penalty. The passive pay the penalty. And that's Proverbs 27:12. So notice scripture doesn't say the prudent panic. It doesn't say the prudent sell everything. It literally says prepare. Massive difference. Massive difference. Not to worry, but just to prepare. And if we go further in Ecclesiastes 11:2, from what I remember, invest in 7 ventures, yes, in 8, and you do not know what disaster may come to the land. That is biblical diversification, is having multiple pots of money. We have yellow, red, and green. Within those colors, there's different asset classes. There's different pots of money that you can be investing in. And this was written thousands of years before Wall Street even existed. Because why? Because scripture acknowledges something modern investors regularly forget. You don't know what's coming next. Neither do I. Neither does CNBC. Neither does Maria Bartiromo. Neither does your favorite economist. So neither the guy screaming about the next market on YouTube or the date And that brings me to the real lesson, is that the S&P 500 is hitting an all-time high. It doesn't scare me. Overconfidence does. And so when people start believing the risk has disappeared, that's when they stop preparing for it. So everybody's making money, everybody's fine, honky and dory, and discipline feels unnecessary when markets keep climbing the way they are. And protection feels just stupid until suddenly it doesn't. Now, for those of you that have been around the block, you know what 01 and 08 was. And you guys remembered the .com .bomb. You remember the mortgage subprime crisis. We got too fat. And Jesus basically told the story of a wealthy man in Luke 12. His land promised abundantly. He had so much. He needed bigger barns. And he essentially told himself, I've accumulated plenty. Now I can just eat, drink, and be merry, enjoy life. But God called him what? He called him a fool. Having wealth isn't the sin. Trusting wealth as though it's guaranteed tomorrow was and is a problem. The message Wall Street desperately needs today is that wealth, all this wealth, does not make you a proponent or overconfident where you don't even need God. Your account balance should never be God. The S&P should never be your God. And it is definitely not your provider. The Fed is not your provider. Your green money account is not your provider. Those are just tools. And when you turn financial tools into sources of security, you cross a spiritual line. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. For where your treasure is, there your heart will be also, like it says in Matthew 6. So maybe the question is how high the S&P 500 can go. Maybe the better question is, if it stops going higher, does my retirement plan still work? That is a financial planning question. That is actually a really good question. Because if you're 30 years old, keep building, keep investing. Volatility may be your daggone friend. But if you're approaching retirement and you're already retired and trying to stay retired, you need to know one thing. Accumulating money and distributing money are two separate things. The strategy that got you to retirement is not the same strategy that will get you through retirement. That's where green money can be completely effective for you, because we're not predicting a crash, not because stocks are evil, but because the S&P 500 can't always go to 8,000, 9,000 or higher. The purpose is simpler. And this is where the real confidence comes in. The quiet confidence, the quiet leadership. I don't even need to be worried about a stock market crash if I already planned for one. So Wall Street and the big media is going to celebrate another record, another all-time high. They're going to celebrate the dollar or the GDP or the Fed cooling off inflation. But I'm just going to ask you, how much risk are you willing to take? Are you actually taking? How much of your retirement income depends on the markets continuing to go upward? How much can you afford to lose? And what percentages do you actually make money? The market goes up, or it does three things. It goes up, it goes sideways, and it goes down. So is all your eggs in a basket where you have to continue to grow your asset if the market grows? That's the problem. Everybody has built their whole life on the stock market going up, but it definitely does not always go up. The S&P 500 grows about 74% of the time and is at 25, 26% of the time where it doesn't. And neither do you, and you actually lose. So what is it that needs to change? Well, I would highly recommend you give us a call. Let us figure this out for you, because this is where red money, green money, and yellow money come all hand in hand. And now we have the ability to protect your money and still grow your asset. Markets are going to fall. Presidents change, Federal Reserve chairman changes, currency changes, economies change. Hebrews says 13:8, Jesus Christ is the same yesterday and today and forever. Amen. But we're going to build wealth, invest intelligently, protect what needs to be protected, and let's enjoy the market. There's ways that I can make money off of this bull market, still have our cake and eat it too, spiritually, with a rising account balance. Not to be confused, we have financial security and the security that comes from God. And this is a biblical stewardship where we can align our values with our wealth, and have our wealth become honorable to the eyes of God. To be smart, to learn to trade, to learn to have products that either glorify him or don't worship Satan. And that's what I really want to make a point today, is that the S&P 500 is going to rise. We get it. But we need to understand that the risk is also rising too. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals, to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has the ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. So I wanted to put some in context. So here is the volatility index, guys. We are currently sitting at 1426. And you guys know one daggone thing. Every time I talk about the volatility index, you understand that it does go up and down, but when it hits this low, the way it does, it's like any stock. When it hits this all-time low, that means the market's high. And last time it hit this puppy was around 14 and it skyrocketed. Look at that. We are almost about the kiss of death here. Once it hits around 13, I mean, the last level was at 1382, and then boom, it skyrocketed. Bad. So we are right there. We're at 1426. If this thing goes at 1350, 1380 around there, we are going to see the market completely go down like it happened before. So I want you guys to understand the risk is real of hitting an all-time high. Now, this is an inverse, so just so you know, this is not the S&P, this is a volatility index. So when fear and greed become an all-time high, like it did over here, this is when the market goes all the way up. Like if you stood on your head upside down, you'd be basically looking at the S&P 500. So now, as this thing gets very low, and every time it hits this low, look what it does. Boom. Every time it hits this low, it just, look at that sucker. Every time it hits a new low, it goes up. I mean, this is common sense. And guess where we're at right now? A all-time low on the volatility index. So we're going to see this thing just completely pop up. And these are not my words. These are just common sense. And here's another chart confirming what I'm saying. This is getting very, very low where I would buy this stock. And this is a volatility index. If you wanted to buy the VIX, you could even buy UVIX, which is double the volatility. And look at this sucker. I got a sell signal here a long time ago. But right now, as this gets lower, we are probably going to see a buy flag here, a buy signal. And that's where it's problematic for you retirees. For people that are even in your 40s, you don't want to lose money like this. If you got millions of dollars and you're just in a fund that's done well for the past 10, 15 years, that is a crock of crap, man, because you don't have 10, 15 years. You may have 5 to 10 years. Or maybe if you're mid 40s or early 50s, you want to be able to protect what you have already. And you may need to diversify your colors. Have some yellow money, have some green money, have some money that is active. Anyways, these are some good charts to just ponder over the weekend. But if you wanted to make money off of a stock market crash, UVIX, again, not a recommendation, is pretty good. And also SPXS, which is one of my faves. This is a bear market fund, so it makes money when the market does crash. Oh, and look at that. I just got a buy signal at 23. So XPSS is going to be a good stock or ETF to look at. I just got a buy alert recently. Actually, I was right before July. So this is on a daily, and it's a little lagging, but it's hitting this technical floor where it's a reversal, a high reversal. So that means when this goes down, the S&P 500 goes up. But when the S&P 500 goes down, this is going to come back up. So yeah, we are seeing some really, really good signs here because we had a sell signal. This buy was from July, and look what it did. It actually made a little pop. But this one, because they're not lowering interest rates, there's going to be some very, very serious volatility, guys. A lot of uncertainty. But 23 on the SPXS is pretty good. This is not a long-term trade. This is only a trade. This is a trade that will make money when the stock market goes down. That's it. Nothing serious. Well, guys, I got to get going. Before I do, don't forget to get your peptides from getmeleanusa.com. Amazing stuff. Animal and protein based. And they ship right to your door. They have amazing drinks. You can build muscle, sleep better, focus better, and also lose that fat. All in one. There's different packages. You can go on a monthly subscription, cancel it, and also have the ability to save 10%. But yeah, they ship right to your door. Go to getmeleanusa.com and purchase some awesome peptides. Also, if you are interested in learning how to protect your money, just go to greenmoneysolutions.com and you can learn more about green money, more than you ever could. And it's just basic chassis frame, universal like information on products and programs that could be in your state, could not be, but you got to give us a call, 813-448-3446. Go to greenmoneysolutions.com to secure your retirement. And if you like this show and this content, then give us a like or a follow on YouTube, Rumble, Spotify, or even Apple Podcasts. And with that being said, God bless you guys. I pray that you know who Jesus is and that you ask that your name will be written in the book of life. God bless you, and we'll talk soon. So how many times have we gotten lost in the minutia of the everyday life? We've gotten fat, we've gotten lazy, we've gotten complacent, not just in our faith, but also our fitness, maybe our finances, maybe our marriage, maybe our family. But we've gotten complacent, and we constantly need to continue to grow. And one of the things I was weak at was in my fitness. As a former athlete, I thought I had it all. My ego got in the way. I'm like, I'll do it later. I'll do it later. Up until now, I have been able to focus on my fitness. For those of you who've been following me for 3 or 4 years, you understand that I've gained a lot of weight. I've used the excuse of having 4 kids, a marriage, a business, helping out at church, all these excuses. And I keep putting myself in the back burner. This is deadly. And what I love about this company, what I love about taking ownership, is that GetMeLeanUSA.com has the ability to introduce natural groundbreaking peptides. What your body demands, what your body needs to release those fat stored cells, to build muscle, to gain your physical being back to where it's naturally supposed to be. We're not talking about big pharma saying we're going to come out with the weight loss drug. We're not talking about losing muscle. We're talking about gaining muscle, gaining your physique back, controlling your appetite, giving you the edge that you need to help you get your body back in check the way God intended it to be, by using his resources with America First products, with America First company that aligns and believes in what you believe in. Introducing GetMeLeanUSA.com. Get in. This is going to be groundbreaking, huge business opportunity, as well as a huge groundbreaking technology that is going to change the landscape. So I know good things before I see it, and I highly recommend you get in. All you got to do is click the link below and get you some fit, get you some lean, and get fit and get lean. This is not going to do everything. Of course, diet and exercise, you continue your walking, continue your protein intake, but man, does it make it a whole lot easier to get in shape. Look at me, I've lost 60 pounds, but this is actually fundamentally a great recipe to get back in shape. And I can personally attest to the amazing effects of this product. So go to GetMeLeanUSA.com. You won't regret it. You can cancel anytime. They're affordable and yet they're effective. And you are supporting our show. You're supporting yourself. You're supporting a mission. There is an affiliate program attached to it if you would want to share it with your friends and family. There's a whole nother opportunity there. But more importantly, let's get your fitness